Hey guys, to the GammaEdge here, coming at you with a market recap for May 13, 2025. Gonna keep it short and sweet tonight. Really, theme was twofold. First off the open, we opened right at 58.50. That's the top of our drunken tether range. We'll get to in a second. Then pretty much straight up right into 5900, which was kind of natural upside target. Then after we got that kind of exhausted move, so to speak, then we really just chopped around that 5900 zone for the rest of the session. We'll get into our intraday volume analysis, how we identified that as well. But right, the day was simple and straightforward. So first off, just going through our pre-market prep of how we got those levels. We can go through that quickly. If you want a more in-depth version of that, we had a pre-market video posted on YouTube as well. You can go review that. But right, starting out with the SPX options market, reason we analyze that, right, is it's forward-looking. And the SPX is the largest, most liquid market. So by understanding what's happening to SPX, we can get a good understanding for what's happening in the general market. This is the SPX A structure, again called dominant above and below spot price, supported with C. Second, we have SPX P, full complex, all expirations are turned on, right, called dominated above and below spot price. This is actually a very strong structure, just given the move that we had 2 days ago. And we just have a ton of, in the money calls sitting below us, right? That is very supportive. There is the risk, or right, of a potential monetization event, just given how, those flipped so quickly from out of the money to in the money. But nonetheless, until that happens, quite supportive for the market overall. Then, right, getting into the 0DT complex, which is, our main focus for when trading intraday. Here, key levels to look at, 58.50, what I talked about in the intro to the video. That's the top of the drunken tether range with the yellow box you can see here. The blue box is our DEX transition zone. So, right, if you're bullish on a day, you want to be above both of those. Right, reason for that being is when we're inside the DEX transition zone, there's, the back and forth between call and put dominated stocks. So we tend to see very choppy price action. Then once we're able to break through that, and particularly break through the upper goalpost of the drunken tether range, that is when tight price generally takes the form of, expansion higher. We'll caveat that we also want to see the confluence of the market trend model, intraday cumulative tick, as well as our intraday volume analysis trending higher as well. But nonetheless, our standard playbook is above the upper drunken tether range. We are more biased higher, assuming that structure is built out, in which it was. 5,900 was a clear target to the upside. And then to the downside below the bottom of the drunken tether range, we would expect downward action. But right, that's a pretty big move from where we opened to the bottom. So that certainly was really not in the playbook, so to speak, today, based off of how we opened. And so, right, getting to that now, here we're just looking at a 5-minute chart of SPX. Right here, this is our opening print. It's also roughly 58.50, right? So, a little bit of a consolidation there. And then really just, lack of a better term, just rocketed higher straight to 5,900. And from there, we just chopped around for the rest of the session. And then moving to the market trend model real quick. Again, just the way we analyze trend and momentum in the market. What you can see is we just had a kind of a classic linear update, both in the cumulative tick itself and the filter tick, which is our measure of significant buying and selling. So linear update, that's just showing persistent buying in the market. And right, you may think, okay, but the SPX was fairly flat after the move higher. You are correct. But, if you go look at the individual stocks, which we can at the end, you'll see that there were a lot of nice moves that were made throughout the market today. Quickly hitting our intraday volume analysis so you can see what that looked like on an intraday basis. Again, if you're not familiar with this, we actually wrote a whole newsletter on it this past weekend. You can go to our blog, GammaEdge.us, and you can read all about it. But right, after we got that impulse move higher, the call speculation was just flat all day. We did not see a continuation and expansion higher. Hence, why we had a bit of a lid on the market, tweeted that out earlier in the session too. We also saw the put side, trending nicely higher as well. So, there really was not a risk of a material collapse either, especially when coupling that with the market trend model. We just didn't see any selling pressure today. But again, then from an intraday basis specific to SPX, there's really just not an impulse to expect a large move higher today as well. So again, that's why I was saying the kind of nice trending move happened right at the open, right up to the target at 5,900. And again, the way I think about it, in terms of a trending move, there's one, maybe two good ones a session. So if you weren't kind of locked in the screen at the open, then you've just frankly missed it. And I did miss it. I was getting ready to stream at 9:30, and then I got a call that I could not get off of. And yeah, I missed it. And then, I got on 10:15, 10:30, and I said just as much. You know what? I said, the move was over. And then, right, but if you are kind of an intraday iron condor player, butterfly trader, like this is the exact environment that you want to see. You're an option seller. Like the goalposts were well defined throughout the session. So, in terms of, selling your premium or kind of playing for a pin at the end of the session, this was a very, very good environment for that. And just so you can see how this is useful on an intraday basis here, we're at 10:15 Eastern Standard Time, right? The volume analysis chart, sorry, that the line of best fit was trending higher, which, right, line of best fit is simply saying, okay, taking an aggregation of what has happened in the call speculation, assuming all else equal, how is that likely to go both on the call side and the put side? And remember that price follows where the centroids go. So this was our best guess, and it kind of manifested, came true. Now, keep in mind, this is where kind of your situational awareness comes in and kind of understanding how the tool works and just screen time of watching the tool. We can see that the call centroids have been flattening out. So that's naturally going to bring our line of best fit lower throughout the session, all else equal. So again, yes, I mean, you could have still been moderately bullish here, but this was flattening out. And so it really just was not indicative at that time that we were going to see a continuation higher. But at the same token, like, selling put spreads also made sense too, because we weren't really seeing a reason to see, like, a material downside move. But nonetheless, we were up at 5,900. We got that nice move higher. The structure was really telling us we really weren't going to go higher than 5,900. So I know I said puts down here, but then, selling call spreads above could have made sense as well. The only reason I was big cautionary on that is just given the strength that we saw in the market trend model. And then, right, just ending it, always looking at that GIF at the end of the day. We simply just stitch our 5-minute visualizations that are automatically produced throughout the session for just a visual of how things played out at the end of the day. And, right, we can see how, the call centroid really just flattened out throughout the entire rest of the session after that opening move. So, yeah, it's pretty much like watching paint dry. The last thing I'll tell you real quick is I know I went over a couple concepts today, like the market trend model. We have a blog post on that. Our intraday volume analysis, we're going to have that blog post up here. It should be tonight, SPXA versus SPXP. You can go review that. Our kind of market turning framework, which is really just our pre-market routine. You can go unlock that. Yeah, we have 10 blogs or so up now. These aren't just run-of-the-mill, word salad blogs, like they're actionable, right? Like if I was going to teach a sibling how to trade, that's kind of the thought process I had when writing these. So I'm really not looking to waste your time. Additionally, on our site, we have free courses, we have free newsletters. Go check all that good stuff out. The other thing I wanted to show you is on our YouTube page. If you go to playlist, you go to the 2025 Evergreen Education. Here, this is where I have all of our blog posts, but I have videos recorded for those as well. So right here is where you can see, our intraday volume analysis, market trend model, all that good stuff. So, whether you're, you want to read stuff, you want to watch me read stuff to you, it doesn't matter. We give you the option. So with that, you guys have a good night. We'll talk to you tomorrow. Thanks. Bye.